So started my first business at 17, kind of got the entrepreneurial bug, made about $70,000 in cash in a couple of weeks while I was still in high school. Prosperous will be a billion-dollar company. If you want to become an entrepreneur, set your sights on a big target.
What was it like managing people at 18 years old? Emil just got lucky. What is your sort of answer to those folks who have that perspective?
It's just as much effort to do something big as it is to do something small.
Welcome to the next episode of the Entrepreneurial Excellence Podcast. It's with great pleasure I have Emil Barr with me today. He is the co-founder of FlashPass. He is I view it, you founded 3 different companies. We'll talk through all of those. You're very young, and don't take that the wrong way. I think that's actually a strength in many ways, and certainly part of why I was really excited and interested in having you on the podcast today, because you're, I believe, 22 right now, and you've started 3 companies. You've essentially merged one of them. You are building a whole new company that's already doing 7 figures in revenue. And you're barely out of college. And so, I think also deferred Stanford Business School, all the things in building in public and for better and worse. And I think the lessons you've learned are probably universal.
Mm-hmm.
And hence why I think it's exciting to have you on here. So Emil, thank you so much for joining.
Thanks a lot for having me, Adam. I really appreciate it.
Yeah. So walk us through really quickly, what parts did I get wrong about your background, or what are the highlights that I missed? So people kind of know why they should pay any attention to you whatsoever.
I think that was fairly accurate. So started my first business at 17, kind of got the entrepreneurial bug, made about $70,000 in cash in a couple of weeks while I was still in high school, and still ended up, went to college pretty much immediately afterwards and started a social media agency. We're fortunate enough to do the social for brands like Nike, Mercedes, some other really cool clients, but essentially bought a few companies while we were in college, rolled it up together, sold it to private equity, or in the process of doing that. And now working on a company that I actually think is a little bit more sort of, the issue is a lot more immediate and pressing because it's sort of a national issue. It's an issue of national security. It's an issue of national prosperity, as opposed to Candid, which was sort of more of a B2B issue. So kind of excited to be doing that and hopefully get to grow that into a $100 million company kind of in the next, 18 to 24 months. So put it all out there for better or worse, and we'll kind of see how we do.
Yeah, I mean, small ambitions. Turning a company, in 3 years, getting to 100 million in revenue is certainly no one would say you are thinking small. No one would accuse you of that.
So I will clarify. I don't think that's a top-down revenue number. I think that's total enterprise value. I think that we'll probably, and that's kind of our middle estimate. But one of the things that my mentor told me, and it's probably the best piece of business advice I've ever gotten in my life, which I know it's not as long as some of your other guests, as he pointed out, but it's this idea that it's a very easy and it's just as much effort to do something big as it is to do something small. And people say it in different ways. I think the famous adage is like shoot for the stars and land on the moon, but the truth is that creating an $100 million company versus a $10 million company, you're still probably working the same 80 hours in a week. You're still pushing, those sort of like 9 to 12-hour days. And so I think that it sort of in some sense becomes a self-fulfilling prophecy, because if you operate and try to build an $100 million company, you might fall short, and wind up with $50-60 million. But it's a lot less likely than if you build something where, like initially for Canada, our goal is to become a $10 million business. And we, I was fortunate, we made a couple $1 million, but it always, I think there's this sort of sense of if you set a really big goal, even if you fall short, your end outcome is going to be a lot higher than if you set what's considered a moderate or a conservative goal, if that makes sense.
It does. So to restate that, you're essentially saying you think an element of success is setting big goals for yourself, basically.
Yeah. I think that it's, if you fall short of building a $1 billion company and you fail at your goal, you might walk away with $300 or $400 million. And so I think that setting sort of these big what might seem outlandish to some targets is a great way for sort of rapid advancement and rapid enterprise growth. And it also lets you attract a level of talent, both on the investment side and the people in the company, that I don't think you could attract with a small vision.
Do you find that a lot of the entrepreneurs or maybe young people you interact with do they have visions that are too small because they're worried? And if yes, why are their visions small? Number one. And then number two, why has what has changed about your vision that you went from you want to build a 10 million company to 100 million? And why not say FlashPass can be $1 billion company? Maybe are you still shooting too small?
So I think FlashPass will be $1 billion company. I'm not sure that I'm going to be in charge of it by the time it grows into $1 billion company. And candidly, I think for us to become a $100 million company, we have to get 5 or 6 states in the country to buy into our vision. And we have to build a case study and prove that it works. To become a $1 billion company, we have to get close to universal adoption across the United States of America. And while I think it's possible, I think that process is going to take a lot longer than 2 years. And it's very different from proving sort of proof of life or showing that, hey, if you think of it as like a vaccine, or a medical sort of science, what we're doing is it's very different from proving that this works in clinical trials and actually manufacturing it and bringing it to market and winning 100% market share or winning 80% market share or whatever sort of prescription you're creating. So I do think that there is the potential for FlashPass to become a multi-billion-dollar company. I also think that, we plan to hit it hard and fast and grow to $100 million very quickly. And then from there, the business becomes a lot more sophisticated and mature. And probably what it takes to grow it into a multi-billion-dollar company is very different for where my personal strengths sort of live and align, if that makes sense.
No, it makes a ton of sense. And actually having that level of maturity and understanding of your strengths and weaknesses is pretty impressive. And so I want to go through that too. Before we get too deep, too much further on this, a question I ask everybody at the beginning of the podcast is, how do you define entrepreneurial excellence? Like, what does that actually mean to you? Mm-hmm. Given you built a lot of companies, you've probably studied lots of people, and we'll talk about that too. What does it actually mean?
That's a great question. I think it's a really good one that you asked your guests. I haven't heard that before. I think that entrepreneurial excellence means finding asymmetric opportunities and opportunities for asymmetric returns. I think that's really what marks an excellent entrepreneur or an excellent business from just an average business or sort of a sub-average business. So it's finding those, and it can be expanded to a lot of things. So what I mean by that is finding those businesses where $1 in is going to equal $100 through the door, or finding those businesses where when you take $1, you make 96 or 97 cents on that dollar. I think I define that as entrepreneurial excellence because the way that we're ranked is our profit, essentially a business's profit determines the marginal value it's creating. And that's a sort of existential question. You could talk about why that's not necessarily the case, but typically in sort of a perfectly efficient market, the more profitable a company is, the more effective it is. I look at it as less of a scale question and more of like if you're creating something so valuable that people are willing to pay you 96 cents on the dollar in profit, or for every dollar that you spend, you can create $100 or $1,000 of value. That's an excellent opportunity. And that's the type of things I really am passionate about and I look into compared to everything else that's out there.
So in a sense, using that metric, would you say like Google and Facebook are the most excellent, like the founders that built the most excellent companies in the world because they are so wildly profitable that they essentially they take such a huge percentage of a dollar in their business. It's like almost, Google, some people argue, and maybe Facebook to a lesser extent, it's almost like a perfect business.
Mm-hmm. I think at their times, absolutely. I think that now you've seen that drop a little bit just due to scale. And I wouldn't describe a lot of what Google and Facebook are doing as entrepreneurial. I know that they have sort of entrepreneurial divisions within the company, but they're sort of more of a large scale company. And you see that because, Mark is involved in Facebook, but I don't think the founders are as involved in the business. But yeah, I think early stages of Google and Facebook are perfect examples of that entrepreneurial excellence model because people were willing to take a massive premium just for the level of service or what they were able to deliver and basically create out of nothing for the individual users.
So when you think through then your own business opportunities
mm-hmm.
and how to achieve incredibly outsized returns defined as excellence in being an entrepreneur, how did you come across the idea of FlashPass? And why was that this is going to be an excellent new business to start? It's very different than, of course, what you were building before.
Yeah.
It's like, why did you decide to start it? Why did it make sense versus the realm of opportunities that were in front of you?
Yeah, I think there's probably a difference between why decided to start FlashPass and kind of why FlashPass makes sense or why we're building FlashPass now, because the business is about a year old, but it's evolved a lot over the course of that year. I think we started it because there was this sort of massive asymmetrical return where Ohio led other states is they created a grant program where if individuals in the state of Ohio wanted to get upskilled through online training, they would get the state would reimburse them for anywhere between $2,000 a certification to $3,000 a certification on the actual training provider side. So what that means is, and these were for online courses, I think the number was higher for in-person courses. So if you wanted to offer an online Excel certification and someone in Ohio wanted to improve their tech skills and go get certified in Excel so they could go find a job, you could sell your course directly to the state. It was free for the end user, so it was very easy to market and promote. And the state would pay you a couple $1,000s for every digital user that you had. And when we look at Excel certifications on platforms like Coursera or Khan Academy, these guys were charging $25, $30 at Excel certification. So it was sort of that idea of, okay, you can make 100 times more working within the constraints of this grant program within the state than you could building a certification, selling it in sort of the private market. And so there's a massive business opportunity there. That was sort of the impetus for starting it. I think what happened with FlashPass is what we realized as we looked at the labor trends and kind of talked to people is that our workforce is facing a very deeply existential crisis. And I don't think people are talking about it enough and people aren't scared of it enough. And I do think that AI has the ability to propel humanity forward. But the truth is, right now, estimates put that AI is going to replace 30 to 40% of the American workforce in the next 5 years. And the majority of those tasks aren't going to be computer engineers, I think, contrary to sort of public opinion, or programmers. What it's going to be is highly manual, repetitive tasks where the majority of a business's cost goes into labor. So we're talking things about people stocking warehouse shelves. We're talking about people that work customer service, cashiers, at various restaurants. All these businesses where their biggest cost is labor. If you can go automate that and do that even 60, 70% as effective as a human and do that with machines, you are going to see that take over and that be a major driver of economic growth in the country. The problem is you are now left with 25 to 40% of the poorest Americans that now no longer have access to work. So what we found, and that Ohio has been sort of very smart at leading the way, is there's going to have to be these massive upskilling platforms or places people can go to learn new skills and find new jobs. And they can't do it on a 4 or 5 year schedule at a traditional university because they needed to start now if they're hoping to get a 4-year degree. So the business thesis for FlashPass is we are trying to create a platform where anyone that loses their job for whatever reason, but we're assuming the majority of it is going to come from AI, can go, most people don't have resumes, your average employee isn't actually putting together a resume, which is sort of uncommon to white collar jobs and the type of people that apply on LinkedIn. So we'll use conversational AI to actually create resumes for them. They can build out a resume. And then what we'll do is we'll actually match them with employers looking for work and help them get the skills they need to be eligible for that employer. So let's say you're a foreman at a factory, you get laid off from your job, and you have 10 years of management experience, running a small team. You can now get recommended, hey, if you get an AI prompting certification from OpenAI and you go and you get a Microsoft Excel, certification, and you have 10 years of management experience, you could be competitive for this office manager role. And then we go to that company and basically deliver them candidates for free. So it's free for the company as a staffing or recruiting agency. It's free for the job seeker. And oftentimes we're trying to migrate them into higher paying jobs from what they initially had and lost, if that makes sense.
Yeah, no, it makes perfect sense. And it's actually really cool. And that's the margin for you. The state's paying you to do that, to essentially help these people get retrained to get new jobs. Is that who's paying?
Yeah. So it's sort of, it's a win-win-win for the state in sort of 3 aspects. So number one, what do people do when they lose their job? In the first 30 days, they do 2 things. They drink and they go look for other jobs. And then after 30 days, they get frustrated.
And they go on unemployment, right? So they start taking unemployment.
Sometimes, yeah, we see that, which I'm kind of getting to, but they get frustrated after 30 days and they stop looking for jobs if they're not getting any interviews or seeing any traction. But the first 30 days, they're very motivated to find something new. You probably, if you've ever lost your job, have been that, on LinkedIn, you start going through and you're just like submit. And then, a month in, no interviews, you start getting a little less excited, and enthused about finding something. So that's a massive problem for states because yes, they go on unemployment, but then they go on programs like food stamps, they go on programs like Medicaid, and it ends up costing the state millions of dollars per week to subsidize the majority of the population. So if we can take a large portion of the population that would be on those programs and help them become economic contributors and find jobs faster, that creates massive cost savings for the state there. So that's kind of the first area of opportunity. But the second is it becomes an economic development tool for the state, where if they're trying to attract a company like Anduril, to their state, and you've got 7 states, in all America, and they're all offered similar tax incentives, what Anduril is going to want to know is, hey, do we actually have enough people that if we spend $1 billion building a facility here to actually work this manufacturing facility? And what this lets us do is the state can turn around and say, yeah, we actually have an aerospace and defense certification, and we've got 4,000 Ohioans that have gone and got this certification because they really want to work in the aerospace sector that are ready to work. So it allows the state to become more competitive for outside investment, capital investment. It saves them money because people aren't on unemployment. And then there's also just a huge social push in the sense of people like finding jobs. People get elected on creating job growth. And it's typically actually a fairly bipartisan issue where we see a lot of support across the aisle because no one wants to vote against people finding new jobs or helping get people employed and off the streets.
Totally. So that all seems really smart. And it sounds like you found like a really good sort of niche in a sense or sort of go-to-market opportunity. I mean, I will pick a quick nit and then I want to talk about like your sales skills there because I think it was a really compelling sales pitch, which I know you've talked about as one of the key things entrepreneurs should do. And I agree, but quick nit, which is basically like how efficient are states in distributing these things? Like all the reasons you just explained seem to make a ton of sense. But you also brought up an interesting point, which is you have things like Khan Academy, and Udemy, and all these other retraining platforms that are out there that charge $25 a year or something, versus $2,000 a year. The state pays some third-party provider to build a potentially less viable product. And maybe not. I don't know the difference between your product or something else. All the reasons you said make sense, but is it better to create some sort of government agency to try to administer this, or instead say to people, go get retrained, here are the 10 different providers we approve of, and submit a reimbursement? Like it seems like a big waste of money for the state to pay so much extra.
Yeah, so not to bore you too much with the details, but the grant model has weaknesses, and we're not pursuing that grant model in other states. It was sort of a unique aspect of Ohio. I think that it is overall a net positive, but that's competitive. So they can work with any training provider. They don't have to work with us specifically to go get reimbursed, and that's sort of unique to Ohio. What we're doing in other states is we are asking for a couple $1,000,000 to actually create a platform that's free for the entire population of the state. So we are building it on our tech stack completely for free. And then we are partnering with the 4 to 5 major employers in that state to actually build certifications based on what they're looking for in candidates for their entry-level roles. So it's a lot less of, hey, here's a class, go give us some money so that people could take it, and a lot more of like, hey, we're announcing this program in this state here. It's now available statewide. Anyone can go get reskilled and find a job a lot faster. It's like a digital extension of the unemployment agency or the unemployment office in the state. And we'll actually build custom solutions where we work hand in hand with legislators on their priorities, but also in major employers and on their priorities and why they're having a hard time filling shifts and kind of trying to solve those problems on a statewide basis.
Very, very cool. And I want to talk a little bit about sort of the different business model they're going after, because I think it's pretty rare for people to say, I'm going to go essentially work with government to go build this. And how did you even come across that? But before we do, I think we just sort of heard almost like a masterclass on salesmanship and a little bit of objection handling from you. So credit to you on that front. I think you just like the ability to sell and explain the value prop and why someone should care, and then deal with an objection about why, that I kind of brought up. How did you get good at sales, and how important is being able to sell to being a good entrepreneur? I mean, you post about it, so I know kind of generally how you feel, but I think you should talk about it a bit.
So I think that sales it's obviously essential to being an entrepreneur, because I think that a big part of it, as I'm sure your other guests have said this before, you're either selling users on your product or you're selling employees and coming to work for you instead of go take a higher paying offer, go work somewhere else, more stable, or you're selling investors and buying into your vision and raising capital. But they're all just flavors of the same general sort of sales motion. So I think it's essential. Or essential that someone on the founding team is very good at sales. Typically, that person is the CEO. You'll see technical co-founders, but generally, I think sales is critical. I'm not sure that I'm very good at sales, to be candid with you. I think that When we've typically brought in salespeople for our product, they actually tend to sell at a higher rate than me at both companies, which is unique. Typically, anecdotally, because I'll talk to founders and they'll be like, "Yeah, we brought in salespeople and they tend to close, lower, and like we lose money. It's like they're just not as good as you." And I've never had that problem. Typically, when we have the budget to hire salespeople, they can actually close a little bit higher. But what I do think that I've done a good job of is build a personal brand and maintain a lot of conviction in the things that we believe in. And I think that there's the law of attraction where we're very good at attracting early customers that really do believe in this, or early investors that believe in the vision. And I think that that's something that I guess you could call it marketing, you could call it vision shaping, whatever you want to call it. But what I found is if you stick to your beliefs and you're very vocal about what you believe and you're not afraid to be a little bit controversial, you will attract other people that share that same belief, maybe if they're not as vocal about it. And those become your early employees. Those become your early customers. Those become your early investors. And in fact, sometimes it's even a little bit better than being a great salesperson because those people are bought into your vision and they're not in it for a capital return. They're in it because they sort of ideologically agree with you. And I think ideological alignment between your early customers, your early hires, and your early investors is key to scaling quickly or really growing a business. Because if your partners disagree or you and your employees disagree on how things should be done, or worse yet, your business and your customers disagree on how something should be handled, it's very hard to build an empire from there.
So all that makes sense, but walk me through it. Like, how do you do that? How do you make sure everyone's ideologically aligned? Or is it just you as the founder having kind of an iron fist and saying, this is the future, irrespective of what you think? Like, I'll listen to your opinions. It might change things how we do it. But is it you as the iron fisted founder who enforces that ideology? Or how do you truly do that?
I don't think so necessarily. I think that, you can pretty typically get a pretty good temperature check on if someone, like, I'm sure I'll say things during the extent, we're just not getting into the good stuff yet, but during the extent of the session that you will disagree with, and I think it'll be pretty apparent from your reaction. And sometimes you might tell me you disagree, sometimes people, if they're interviewing for a job, they might just, raise their eyebrows or kind of back off a little. But I think that, there's a natural sort of, as humans, we're pretty good at picking up when people are sort of agreeing with us or people might disagree with us. And I think some level of disagreement is healthy, but I do think that like testing for that ideological alignment is pretty much fairly simple. It's a simple share your ideology and sometimes just point blank asking people, do you agree? And it's totally fine if you don't, like, I want to hear your perspective. You're here because I respect your perspective. You've done interesting things. But if someone disagrees with you on a large matter of ideology, I don't think they're a fantastic early hire for the company. They could be great in a corporation where you need a lot of diversity of viewpoints and things like that. But in an early startup, I think, so the short answer is testing people to see if they align isn't that difficult. You just ask. I think what you were getting at is how do you share that ideology and like get it out there? And I think that part of it is just finding a medium that you're good at. So I enjoy writing. So I write a lot, and we'll put out white papers, or we'll put out, case studies and sometimes just ramblings that like we send out to investors. And I've started to now write on LinkedIn. But I think finding whatever medium you're comfortable with and that you sort of most effective at developing your ideology and then just doing a lot of it is a great way to kind of get it out there.
Well, getting it out there, but then is it also just reinforcing it with your team, with your investors, with your customers almost? Is it sort of a reinforcement mechanism as well?
To an extent, but I think that if they agree with it and they kind of join the company on the premise that they agree with that ideology, there's not that much of a need to reinforce it necessarily. I think that reinforcing and kind of building an organization around core values, those are things that I've heard operators of larger companies talk about, and when you have a larger team, I think it becomes a lot more important. Checking for cultural alignment and fit. That's not something I've had the sort of, pleasure of being able to do yet. Companies have never gotten so large that we've sort of had to worry about it. Typically, everyone's been fairly aligned to the mission just by virtue of our small size.
And so going back to asking the right questions to new people on the team, what do you ask them to see if they are an ideological fit? What is the question?
I think that we'll typically so for FlashPass, we'll ask them, where do you think the future of work is going? We ask them what they think about AI. We ask them what they think about the U.S. government and kind of where we see the future of the U.S. government going. And so, yeah, I think it's just, kind of, they're a little bit more open-ended. They're sort of vague interviews, but I do think they create an interesting dynamic.
Do questions like that, I agree, but do they lead to a political discussion? Like, you don't want to be hiring based on political ideology necessarily. Although some of the questions, future of U.S. government, even future of AI, future of work, some of that can quickly lead to ideological discussions, which are not necessarily, I don't necessarily think all that helpful for building the future, but we live in a very political age.
we're a government contractor, so we have to be nonpartisan. Like, we can't be partisan. It would kill our business to do it. And I also think there's probably ethics rules and rules against. You can't be sort of outspoken, deep aligned with one political party or another. That being said, we are actively working with the US government to develop AI solutions. So asking people what they feel about working with the US government and what they feel about AI solutions, I think is highly relevant or germane to their day-to-day role. And if you can't really have a conversation about how they feel about the US government or government contracting without sort of injecting political beliefs, I think that's a good sign that they're potentially not a fit to work at a nonpartisan government contractor, given the sensitivity of the type of work that we're doing and the various types of people we're working with on both sides of the aisle in a day to day.
Have you had to let people go because they're either not an ideological fit or not just generally achieving the outcomes you're expecting?
Yeah. I think, we've had to learning how to fire a lot of people was tough. I think I fired my first employee when I was 18, and it was like, like you beat up about it. And then we so it's tough. I think firing people is always hard. I think that it gets easier with time, but the easiest way to think about it is, do you want to potentially give this person a few more weeks to improve on their job and potentially endanger the job of the other, let's call it, 19 or 20 people that work at the company? Or do you want to do what's best for them? And oftentimes those few extra weeks, so it's painful, but we've never had a firing that we've regretted. Oftentimes I think the biggest lesson was we should have done that sooner. The way you have to do the mental calculus is, it kind of sucks and it feels bad because this person is, counting on you for a salary and things like that. But if their work performance is endangering the livelihood of the other 20 people at the company, you have to do what's best for the majority, or sort of for the entire organization and not just them.
100%. I mean, that's great. It's standard, but also very great advice and stuff I completely agree with. What was it like managing people at 18 years old? I assume the large majority of people you manage then, and probably even today, are younger or older than you. And I'm sure for some of them, that's kind of awkward to be managed by someone. I remember the first time I was managed by someone younger than me, and it felt weird because I'm like, I have all this experience and this person's telling me what I should be doing or how I should be doing stuff. And it can be difficult to push down your ego and realize that you aren't, just because you're older does not make you more senior or more knowledgeable. And then also for a younger founder, how do you handle that? How do you handle managing people who might have egos and who are older and feel like they have strong opinions?
I think having a great COO that is older, or at least a little bit older than me, which hasn't been hard to do, just given my age profile. I think it's delicate. I think that there's an art to it. I also think I learned pretty early on that I'm not very good at that art. So as soon as it's become feasible at both companies, we've hired sort of chief operating officers, whatever you want to call them, general managers, to kind of interface with the majority of the team. And I think that's great because ultimately the way I look at my role is, I have to sell a vision. I have to keep the team bought into that vision. And ultimately, a lot of the nuts and bolts of kind of how you handle performance reviews and see if people are stacking up directly, it's great to have a hire that can do that and sort of insulate you from a lot of that. And then I think it's actually better for team morale. We've seen when we implement those people, team morale goes up because it creates this sort of diversion where you can talk to the COO about things related to work performance or management feedback and things like that. And yet you still feel like there's someone kind of driving the bus or raising money from investors or doing these other things. So I think it's good, but the short answer is creating, not being the direct manager, but creating some level of distance between you and your team. So you're not their boss. You're just the CEO, or you're not the boss. You're just the founder. And you're the guy that talks about like what the company is going to look like in 4 years. Or you're the guy that goes talks to VCs and brings a couple $1 million home so everyone gets raises, is a great way to kind of get team alignment. And then the team cares a lot less about your age than maybe if you were talking to them every day and directly reviewing their work performance and doing things like that. So the short answer is I haven't cracked it. I found that it's actually easier to hire someone that's, a little bit more, number one, palatable to them. But number two, that's just maybe a little bit better on those soft skills. But that distance then sort of avoids tension because if you're not directly working with that person, or directly reporting to them, there's someone in between. There's a lot less ego around age or things like that.
So arguably, I mean, you have cracked it by figuring out what you just explained. So I think you maybe have cracked it. With that said, you still have to manage that COO, right? Presumably that COO is also more senior than you, has a lot of experience, is probably part of why you brought them on board, is because they had them more experience. And now you're still their boss. You're still managing them, if not the rest of the team. So even how do you handle their egos and their strong opinions? Or do you hire for people who say like, I will have a strong opinion, but I will agree to disagree at some points and just move on?
Well, it's like a relationship. It's a lot easier to have one significant other than it is to have, 10 or 12 at the same time. For starters, it is a lot easier, to find the one right person and kind of talk to them and even manage and provide good feedback and be an effective manager for one or two people than it is, for 30 or 40 or 50 people at once. So I think that, part of it's just you have more time, you can give more attention, you can be a little bit more sensitive to how they feel about things and kind of have, just like provide more direct access to it. But also, oftentimes, I found that these operators are very good at running the company, but they're not necessarily typically very good at doing the math in the sense that rarely are these people coming and sniffing out $100 million opportunities or $1 billion opportunities. They're typically very proficient and good at running a P&L and great at running people. But they are usually self-cognizant enough to understand that they can't sit down in front of a laptop and come up with something, and raise a couple $1 million and create, $20-30 million of enterprise value in the span of a couple of weeks. So they're often looking for someone that can do that and complements that. I don't really hire first-time COOs, so I typically hire people that have worked in that role before, that have worked with CEOs, ideally at fast-growing companies, and I will often call that CEO and say, hey, what was your experience, and why aren't you working with this person anymore? And hear from them, and that typically gives me a good judge of kind of the working dynamic and their character.
And then just to check to make sure I look a little bit further from what I think I heard, basically you've broken down the roles and responsibilities in clearly separate areas. You're saying like to the COO, you're running the business, you're running all these people, you're making sure we're delivering on our outcomes and expectations. And you, Emil, as CEO, you're going to go figure out the next big deals, think about the big vision, figure out what the next big products are you need to push, and you've sort of separated out roles and responsibilities in a fairly clean way. Is that accurate? And then there is an overlap, so there's not a lot for you two to fight about.
I think that's part of it. I think, to be a little bit more blunt, it's typically COOs are very rarely charismatic, and they typically can't sell.
CEOs or CLOs, sorry.
CEOs, like not hyper charismatic, and they typically can't sell because if they could, they would be running their own thing and they would be making a lot more than they're making. But they're typically at the stage of career that we hire them in aware of that. And sometimes they have no desire. They have no desire to do road shows and pitch investors or go talk to state governments and testify in front of congressional panels, on why AI is going to take half of the state's jobs. And, kind of like there's typically very low appetite for that. So I don't think it's that completely like severing those roles and responsibilities. But I think that COOs typically understand especially in sort of high growing tech companies, the need for a CEO and what the CEO does. And they typically have very little interest in taking any of those roles or responsibilities or dictating fundraising strategy, or dictating, PR strategy, because that's not something that's necessarily the good ones I found don't want to touch that. They're not trying to run those pieces. Those are the parts of business that they hate.
Yeah, I think it's a great point is also trying to hire people who know what they are good at and know what they're not good at. And also you have to be aware of that for yourself as a founder too, and be clear on that front. And then you can hire well and build the team out. So go ahead. You have some.
I firmly believe that everyone has one, maybe two sort of superpowers or things they're really, really good at doing. And we live in a world and have an education system that kind of shuts that down. So they tell the kid that's bad at math but great at art to go get a math tutor and get better at math, or they're going to flunk out of school instead of let's go get you an art tutor. You don't see if you're the next, Dali or something like that. So I think that, you see that a lot in business too. But I think that fundamentally, you have to be extraordinary at one or two things. And I don't think there's people that are extraordinary at everything. So I just think that there's this aspect of, I only think I'm good at one or two things, but I work really hard to be really great at those. And anything that I'm not good at, everything from the bookkeeping to the legal to the managing of people, instead of trying to adjust for that weakness and become better at it and, hire consultants or read books and kind of just try to improve it, I have sort of tried to eliminate as much distraction outside of those one or two things from my work schedule and from the way I build my companies, and just focus on those one or two things completely.
Yeah. What are your two superpowers?
I think, we talked about this, but both of our businesses have operated on 99% gross margins, which I think is atypical. The average business in the US, runs on about 30% gross margins. So I think identifying these sort of pockets that are hyper profitable, or something like that, hyper scalable just due to the nature of how profitable they are. I think that's sort of one of them for sure. I think the second one I found is that I am a very effective salesperson, but typically one-on-one. I struggle with groups. I struggle with high volume. But if there's a strategic account or investor or a client, I can't think of a time I've lost a sale that would be key to the business or an investor that would be key value add to the business. And everyone from, billionaires and celebrities that we've kind of met with to people that, are a little bit more boring and sort of day to day and mundane. So I typically try to fill up my calendar with one-on-one meetings that are very high priority for the business. And I typically fill up my calendar with examining sort of opportunities of high profit, and kind of like doubling in on whatever's the most profitable for the company and trying to expand that.
How do you identify those high profit areas? Like, what is your process for doing that? Or do you sort of fall into it? Like FlashPass, you sort of evaluate your...
I wish there was more of a process there, to be honest with you, but I don't think there's a massive, I don't think there's been a huge process. I think it's just the way that when we build a business from the ground up, we build it with the modus operandi that we should be making 60 to 70 cents in profit net on every dollar that we kind of bring into the company. And we built both companies with that principle. And I think that, especially Step Up Social in the social space, I didn't know anything about marketing. I didn't know about business. I didn't know you were only supposed to make a 10% margin and a 25% gross. So we simply did build a business that way. And then we met and started buying other agencies and talking to other agencies. They're like, oh, I'm like, why haven't you just increased charging twice as much and paying, the creators 60% less than you're paying them? And the answer is just like, we never thought about doing it that way. So I think to sense my ignorance was almost like a superpower,
No, that's usually the case. It's the beauty of any early stage business person is you have to be somewhat ignorant. Like, you have to know the space well, but you also have to be somewhat ignorant to make it successful, because if you know all the nuances, you're likely to think everything's been solved.
Yeah. And I think the other thing is quite early. Like, if it's obvious you're not going to make that type of profitability or the business doesn't have legs, I probably have 50 business ideas I've abandoned before I kind of went all in on, FlashPass and went all in on Step Up. And I think there was just a matter of, I think entrepreneurship is hard. And I've learned a lot, but I think that sometimes we glorify the struggle of entrepreneurship, and entrepreneurs wear it as a badge of honor to keep working on something that's not getting results. I probably gave up on 2 or 3 business ideas that, looking back, I actually think could be pretty good, and pretty effective, but they weren't making that sort of, I wasn't seeing the number go up dramatically, and we weren't making 70 cents on every dollar we came in. So we kind of walked away from those because we were making 10 or 15 or 20 cents and said, let's try something new, until I've kind of found these pockets of opportunity that are hyper profitable.
I mean, I love that. Okay. So we're going to jump back for 1 second. I just want to ask, you talk about COO stuff. Let's talk briefly, going back to co-founder. So at FlashPass, you're co-founder. Mm-hmm. Why have a co-founder? Why not to have co-founders? What's your general thinking around that for startups and founders?
Yeah, I don't have a ton of perspective there. I will say that at FlashPass, we needed someone that understood government, and my co-founder understands government really well and spent their career, both of them. We have actually 2 co-founders that both spent their careers in government, and they've secured billions of dollars in sort of collective funding for different platforms and apps and government ventures. So I think it just made logical sense, I didn't know anything about government, and I think it's very hard to break into gov tech and government contracting as a 21-year-old at the time with, surely no experience, if not impossible. So I think that was out of necessity. In general, I'm for it because FlashPass is a much larger business than Step Up or Candid ever were, and I didn't have a co-founder on Step Up at Candid, and I did at FlashPass. So, kind of those isolated data points point towards the power of a co-founder. But I think it really is that co-founder has to deeply and uniquely complement your skills. And I'm not sort of set on this idea of a technical co-founder. I know that's the prevailing wisdom, but I think
depends on the business, right?
Yeah, but I'm just not sold on that idea of giving up half your cap table to someone because they can code or because they can code well. I think that, the business should have legs enough to stand on its own, where you could go raise a couple $1 million, and give $1 million of that, to 2 or 3 engineers, and sort of give up a much smaller portion of your cap table, or sort of have it be a much bigger value add. So, overall, fan of co-founders. My co-founder experience has been phenomenal from just like a purely economic standpoint for FlashPass. But I'm not sold on this idea of just because someone is willing to do it for free or because they have one particular skill, they should be an equity co-founder in the business. I think it's more so that they have to have skills that are uniquely complementary to yours, and that probably looks different for all various companies.
What is your high level breakdown with your co-founders on the economics? Like, do you own over 50% of the company and they each got 20% or something, or like high levels that you feel comfortable talking about? But how did you guys do that split? In what then constitutes a co-founder in your mind?
Yeah, so we split it 50-50, and it was just because.
Well, you said you have two co-founders.
Yeah.
So everyone's one.
Yours out of firm, so they had their own company. We split it 50-50 with their company, and then they own that subsidiary 50-50. So they both wound up with 25%.
So they have 25%, you have 50%.
Yeah. Initially, we sort of saw them as an entity. Over time, I think it's bifurcated, and sort of my two co-founders have taken different responsibilities in the company. But initially, they were both government experts. They had a government relations firm that they co-owned. Their pitch was, 60-40. And I said, I'll actually give you guys 50-50 because I want you guys bought in. And there should be no one with, that sort of makes the final decision here. It should be a team venture. And I'm really glad I did it. I think the 10% did help, because it kind of put us in that pocket of oh, you own a big part of this, we're equal partners. But yeah, I don't think it was out of a desire of, versus splitting it equally in thirds. I think it was just that the desire was to split it 50-50. And they initially approached me as an entity, with sort of support staff. And then as the business grew, it just made more sense to spin it off and just formalize their equity and not have their company be the holder, and just kind of have them do it because the total enterprise value of FlashPass was exceeding the value of the holding company, that they were using to run it through.
So just to check then, my one bit of advice would be, I do worry for companies when they say they split things 50-50, because then there's always a chance you can get outvoted in dangerous ways when the going gets tough and things get rocky. Sometimes people have a different take on the world, and it leads to a risky scenario where you could get in trouble. So I know it's obviously what you did, and it might work out great, but having a little bit of extra control and having that discussion almost upfront might save you a lot of heartache in the future.
I think there's a lot of risk. I think there's not as much risk as people think with that. Fundamentally, first of all, typically your partners are rational and they're going to do what maximizes their wallet. And I run the business day to day. And I think that it's, if you've, made them 20 or $25 million, it really you have to have a difference of opinion, that's fairly major to kind of walk away from that. But I also think that for us, we knew we were going to fundraise and we were going to build a business, and the board dynamics would change. Now we're creating a board of investors. There's different board seats. The investors want board seats. We knew the voting dynamics were going to change after we raised our first round of funding. So as a placeholder for the first 12 to 18 months, having that 50-50 structure, making it clear we valued them kind of as equal partners, I think works. I'm not sure if it's a long-term sustainable sort of corporate governance strategy, but at that point, as the business matures, you set up a board of directors and the investors are going to want board seats, and it just kind of the dynamic becomes different. But I don't think it's that bad in the early days of a company because there's not a lot of money to vote over. There's not a lot to lose.
We'll really push back hard, though, that your point about people being rational or economically rational. I've just seen too many situations where people are sometimes willing to burn down everything for some emotional reason. They might think it's rational, but for an emotional reason. So just warning to all the people listening, I think what you did makes sense, and it sounds like it worked out well, especially because you're bringing on third-party investors. But there are too many situations where you want to be fair, you quote unquote fair upfront, and it leaves you vulnerable in the future, and you get screwed because someone emotionally takes a different tack on things. We've talked a bunch about a lot of different things. And look, you're incredibly articulate, thoughtful, and frankly very successful so far.
Thank you.
Walk me through what you were like as a kid and how you came to this point in life. Were you always going to be an entrepreneur? Did your parents always see that in you? Did they raise you a certain way? Or is this just something you came to because COVID forced you to start a tennis camp in your senior year of high school?
Yeah, I think I was a weird kid. I grew up in middle of Ohio, and I was always a fish out of water. I was the kid that wore suits to school. And
why did you wear suits to school? I know you still wear suits most days.
I couldn't tell you. I think, there was an aspect of personal brand. I think there was an aspect of I just really like James Bond movies, and I couldn't afford the car.
Did people make fun of you?
Some people did, I don't think it was that bad. I actually don't think it was as mean-spirited. I think it was just weird, and to an extent eccentric. I do think people, I had my fair share of more issues in like middle school and junior high school. But the short answer was by high school, I sort of embraced my weirdness and that I was a fish out of water. And I actually found that when I started wearing suits and just like owning it a little bit more, actually my school experience got a lot better and became a lot easier.
Almost because you're like, this is who I am and I'm not going to like apologize for it.
Yeah, and then it kind of takes all the wind out of it, the fun out of it, because it's like, oh, like, if he's flaunting it, there's not that much to like make fun of, like you're not sharing new news. But yeah, I think I always kind of wanted to get out of Ohio. I always felt like I was kind of like a fish out of water and I wanted to go, my dream was to live in New York and kind of like go build. And then after that, I wanted to be ambassador, so I went into school kind of studying international relations. And I was like, I'm either going to live in New York or like live in another country, and kind of like negotiate these like peace deals and become super kind of like cultured and see the world. So yeah, I don't think entrepreneurship was ever really a big sort of idea. I actually don't even think business was huge, like, focal point for me.
Are your parents in business at all, or what do your parents do?
My mom's a teacher. My dad is in business. He works in an insurance company. He works in data governance. So fairly technical, not like, M&A side or like things like that. Just like sort of like, project management governance for a large insurance company. But no, it really did come from this idea that I wanted to make enough money to go to school in sort of out of state, go to school in New York City. And, cost of tuition is and board is about $100,000 a year, which is not something that most middle-class families have laying around, $400,000 casually. It's crazy. And I think it kind of broke my heart a little bit because I'd sold myself on this idea that I was going to go get out of Ohio. I was going to go in New York and like find my people, and like go to one of the best schools in the world, and then it's like there's this huge, never even thought about the money that much. And there's just like this huge cost barrier where we looked at the numbers and it's like, it's like, I think they offer like 10 grand in like student aid. So it's like, okay, like where are you going to find, $360,000, And so, but I did find that I was sort of good. I think I had something. So I kind of made $70,000 doing these kids' tennis camps during COVID. Basically, we found out that parents just wanted somewhere to put their kids. They didn't care if their kids were even getting good at tennis, but it was great for the kids. They got to see their friends. Tennis was a socially distant sport, so they could all hang out. And the parents could just get the kids out of the house for the first time. And like, who knows how long. So it was like $15 to drop off your kid for the first half of the day, $25 if you wanted to leave them there all day. It was just like the local public.
It's so crazy. By the way, that price is just so low compared to at least San Francisco prices. I mean, San Francisco is probably like $250. I don't know quite know, but like $250 a day, I bet, or something crazy.
Yeah, well, that's how much like tennis clubs were because they have overhead. But we were doing it on public tennis facilities, so we had no expenses whatsoever. Not a sustainable business model, partially because number one is predicated on all the tennis facilities being closed, and number two is predicated on using public resources for like a private business.
Right. I mean, I'm sure there must have been people who came out and want to play tennis, and there's just all these kids there. Like,
yeah, there's just like 40 kids. But ultimately, the business, people started telling their friends, and so we ended up actually at our peak, we were doing about 8 courts a day, across the city.
You should have a higher price, like $50 a day or something. And
well, no, I didn't have to because I hired the entire sort of like girls varsity tennis team basically that were all doing like babysitting gigs and stuff, and we paid them like $150 a day, which was like $35 an hour or whatever it's in the high school world to like run these classes. And yeah, in that sort of like summer leading up to college, I made almost $70,000 like in all cash. I had to like drop it off to the bank, and they like definitely thought I was doing something else. And then I went into school, and I was kind of like, I'm going to make my best in Miami. Miami had sort of a fairly well-recognized undergraduate business program. I decided to pick up my major in business in addition to sort of diplomacy. And I kind of sat into this like career exploration course, and they're like, hey, if you do a really good job and you sort of land top of your class in school, you could make almost $70,000 a year as an entry-level sort of analyst at like Deloitte. Deloitte is a huge, and Ernst & or EY, Ernst & Young, they're like huge employers at Miami. They're like, the top 10% of the class gets to work there. And I was doing the math, trying back in napkin math, and I'm like, wait, I made $70,000 in like 3 months without a college degree. You're telling me if I work really hard and land top of my class, like I can make that in a year, like if I adjusted. So that got me thinking about entrepreneurship. And kind of just had me sort of thinking like, I think that I either want to do something in diplomacy or be an entrepreneur. And then I started Step Up and we started growing, and I kind of fell in love with entrepreneurship and building a business. And I found that I was good at it. We hit $1 million in revenue in less than a year that we were doing it for my first company. And I was sort of reading the stats that the average business takes X long to reach $1 million and X long to fail. And we were all bootstrapped. I didn't know what an investor was. So I think there's a natural proclivity to it where I was like, hey, I'm pretty good at this. And I think this is kind of what I want to do. And I want to keep sort of investing and growing this business because I think it could really be something.
And you're probably sitting there not laughing, but sort of thinking about your friends who are like, oh man, I got my job at Deloitte for $70K. And like, we just did $1 million in revenue, and I don't know what percentage you paid yourself, but you probably paid more than yourself, more than 70K. And of course, you also owned a whole business with real enterprise value that.
I think there's a lot of sort of like, just like with the tennis camps, I think there's a lot of actual judgment kind of like in college, where if you're not working at what's considered a prestige employer, it's sort of like perceived negatively.
Totally.
So actually, I think there's a lot of like down the nose, like, what is this guy doing? Because it didn't look particularly glamorous, like it was like, like a laptop and like 2 or 3 people, and it was, and it was a horrible, what it took to grow a business. As I said, I gained like 50 pounds and I was like, I was maniacal. I was working probably 20-hour days. I'd sleep like 4 hours, had all sorts of health issues and stuff. So I don't think anyone was looking at that with envy. And I don't think there was any sort of like sense of superiority necessarily. I think that you saw people sort of come around, and like, people started treating it differently. It started, even professors would like kind of like, joke about it or be like, like, oh, like, it's like cool that you have a hobby, or like you're doing something else in addition to school, but I need you to show up to class more. We're going to sort of like funk you. Once we started, really, I think once we hit a couple million, started buying companies and kind of we started doing the news and the PR, I think that general public perception changed. But for me, it was always just like, this is what I'm doing today, and I don't think that my actual opinion changed. I guess I just always thought it wasn't for me. Like, I knew I didn't want that, but I didn't necessarily think that I was better than those people. And oftentimes, I think at first, our business was perceived, because I was trying to build a business as opposed to like go get an internship as Deloitte or like JP Morgan, almost like lesser than my peers in business, if that makes sense.
It does. Why do you think though what is the mindset do you think that makes it different? Like so many people they want to be an entrepreneur, right? I bet there's a lot of your friends who are maybe at Deloitte still today and maybe look at your life and be, man, I want to be like Emil. Like I want to go be an entrepreneur, right? This podcast is all about being an entrepreneur. I want to go be an entrepreneur. Yet they never do, right? Look, I'm going to ask you to speculate and maybe be a little bit mean about your thinking here, but like, why don't they ever go do it? This isn't just your friends. This is maybe people in the world in general who don't take that step. What are they scared of? Why should they be scared or not be scared?
Well, they should. As I said, I mean, I think they don't do it. Like, if they did a few days, in my life, they pretty quickly, I think, decide that they don't want to do it, because the perceived benefits that you get, which are financial, there's financial benefits if you're successful, oftentimes are greatly outweighed by the loss of physical health and mental health. And people, I think there's 2 categories of entrepreneurs. I was part of a group that really prioritized lifestyle entrepreneurship, and the idea was how to make at least $1 million a year working only 10 hours a week. And I think for those people, I'm not sure why people don't do it, actually. I think they had some really interesting business models, and I think there were some really interesting people. Those people were living a great life. For the people that want to kind of like, are sort of like messed up like me, I totally understand why people wouldn't want to work 100 hours and mortgage their entire future and their credit score and go get, hundreds of thousands of dollars of personally secured bank loans and then go try to, build something from nothing. I totally get that. I think it's one of the most difficult, painful experiences building Candid was, and I really wouldn't wish it upon anyone, again. And that was partially due to ignorance and me not knowing things like you could go out and get investors and, things like that. And I think I learned a lot along the way. But I think the reason people don't do it is just because it's hard, and you really do you make a lot of money being an entrepreneur, but you have to earn it. And I don't think that there's asymmetric returns in entrepreneurship, or at least, I think that you really do, like, you have to earn your battle scars to make money. I don't think it's ever easy. And I think that compared to a job where you have some level of security and you can sleep at night, and you don't have, like in our case, it's like you're not your own boss, you have 15 or 18 bosses that are your clients, and I think like that, people would much rather do something that gives them time for their family and significant others and gives them some sense of security than go out and do this.
So I agree. But yet I also, it bothers me a little bit that there seems to be a rising anti-entrepreneur perspective in the world where it's like, I hate Jeff Bezos or, these major billionaires who've made their money through building really successful businesses. And yet they put the effort in the work in to go create something out of nothing that people are willing to pay for, right? No one's forcing you to use Amazon. And yet you are doing it on a regular basis. So in the same thing, maybe there's friends of yours who have this envy. They're like, well, Emil just got lucky. He got things handed to him or who knows? And they don't remember the struggle or even know the struggle that you went through to get there. What is your sort of answer to those folks who have that perspective?
I think it's only happening actually in America. I don't see it happening globally. I don't think it's a
But there aren't a lot of entrepreneurs globally. We also have by far the most
yeah.
entrepreneurial
Um,
economy in system.
yeah, and I think my advice to that is like I encourage you to go to literally any other country and see how the average person in one of those countries lives. And I think that it comes from a place of, you know, I do think there's a concerning trend of entrepreneurs doing less and giving back less. I think we've seen philanthropy sort of like basically fall off a cliff, and like the
Really?
rate.
Is that the data point?
I think it's a data point when we look at there was a time, first of all, so there's a few things here. Like if we want to get historical, first of all, the richest people in the world have always been hated by a large portion of the population. There are rare exceptions where you see like, universal love for someone, but Carnegie was hated, Rockefeller was hated, and I don't think that Bezos and Musk are any more hated than, Rockefeller was in his time.
Sure.
I mean, but second of all, I think that, history looks back at Rockefeller and Carnegie more fondly because they donated the entirety of their fortunes and basically kind of like built the country. But if you look at sentiments during the time, I don't think it's that different. I do think that there's been this sort of rise of anti-entrepreneurship like that in America. I've noticed recently, like over the last like 5 to 10 years, where it's like before it's like, yeah, like hardworking, he started his own business, this is awesome. And now it's like, oh, it's like, why did he start his own business? Like, this isn't fair that he has that much. And for that, I just think that, it happens because I think that if people went out and saw the world and saw how the average person in Southern America lived, or the average person in China lived, or in these countries that don't have these sort of rewards for entrepreneurship and don't have these sort of open markets, I think their perspective would change very differently, because the way that someone lower middle class in America lives is like heaven, and it's just like a dream, and it's the way the richest people in some of these other countries live, just given the amenities and the lifestyle that they're afforded.
No, it's a really strong point, and one that I think a lot of people miss, which is, to restate it, tell me if I'm restating this properly. Essentially, it's all about perspective. Essentially, like, America has been made as successful as it is today. We have some natural just resources and natural things that make us more likely to be successful. That makes us really lucky. But also societally, the ability for entrepreneurs to go try and to fail, right? The ability to fail and not have that destroy your career, your life goals and career. You can get up and start again. Has enabled us to actually expand the pie for everyone. Is that essentially what you're saying?
Yeah, I think that the American capitalist market, the American markets are the most entrepreneur-friendly markets in the world. And I think most people would agree with that, from other countries that are entrepreneurs. And there are asymmetric returns for entrepreneurs in America that do not exist elsewhere. I think that it would have been very hard for Jeff Bezos to become as wealthy as he did, in Europe even, and much less, definitely, if he started it in Brazil, he started his company in Brazil. What I think is people fail and they see that and it rubs people the wrong way, but I think that they fail to appreciate how much wealthier the average American is and how superior their way of life is to the rest of the world and most other countries that don't have this system of asymmetric rewards for people that are able to create these sort of very valuable companies or create massive employment opportunities.
Correct. And the magic of that, I mean, just using Amazon for an example, everyone knows, like, the magic of being able to get something like same day from a warehouse of millions of products. The underlying magic to make that happen is amazing. Or this product we're using to record this today, the magic of this all being able to work because some entrepreneurs put this stuff together for a virtual recording studio. All these things sort of build upon each other and create something magical. So I don't want to go too far down the road because we can keep going, but like I want to do a little bit like of a sort of, actually, before we get to this other question I want to ask, let's talk briefly about great entrepreneurs of the past and of today, and how much time you spend, if any, reading about what it means to be a great entrepreneur. Like, when you think through, like, are you someone who is a historian of entrepreneurs, or like what else has helped you shape you to be the person you are today, and will you believe help shape you for the entrepreneur of the future that you will also be?
Mm-hmm. So I read a lot of biographies. I think in college I wanted mentors, and we picked up a lot of sort of quote unquote mentors. And
when you say picked up mentors, what do you mean?
People were like, I'm going to mentor you, and started giving a lot of business advice. And I think what I realized is I almost had too many of them, and became sort of an echo chamber of like one person thought one thing and one person thought the other.
Do you think they will all these people wanted to mentor you? Was it because you were kind of an obvious sort of shining light?
No, I just ask. I was like, I really want mentors. I had no idea what I was doing. So I think I kind of like moved in the other direction, which is like everyone I knew, I was like, can you mentor me in my business? And we ended up having like 40 mentors, that were like all like giving conflicting opinions on things in like an email chain. It was horrible.
But in some ways, it just pause you really quickly. People also forget, if you want to do anything, you need to ask.
Mm-hmm.
Like, you need to be willing to ask. And it sounds like you're really good at that without any shame. Be like, I need help in something, I'm going to ask. And yes, it implies that I don't have the answer, but that is okay.
And there was an aspect of, so definitely. So I think that, kind of at first I knew nothing, made a lot of mistakes, and realized, there's people that know this, but kind of went in the other direction and picked up like, we'd have 34, 5 people giving business advice on this one issue in a chain, and everyone disagreed with each other, and it was very hard to make heads or tails of it. So I had to sort of develop this methodology of, I realized that I wanted to take advice only from people who I wanted to be in their position at their sort of equivalent age or sort of at their, stage in their career. And that was really helpful because that let me focus in on 2 or 3 relationships from people I really admired and respected and thought they'd accomplished a lot, but were also just like very good people. Like I was like the impact they were having in their community and what people thought of them. And I kind of wanted to learn as much from those people as possible. To sort of help augment that or supplement that mentorship, what I started doing is I started reading books because I realized like it would be great to have Elon Musk as a mentor. It'd be great to have Steve Jobs as a mentor, but Steve Jobs can't do that, or Warren Buffett, and even if they could, they certainly weren't going to respond to some email, from some like 19-year-old.
Oh, you never know. You could have tried out. I mean, obviously not with Steve Jobs, but like you could have asked some of these other guys and you never know what they would say, but I hear you, generally speaking.
So there was an aspect of I started reading, but they would have these sort of really detailed biographies that would actually give a lot of advice similar to what my mentors were telling, which was often like, this is what I did, this is my story, these were the biggest things I learned. That stuff was available through sort of these biographical accounts. So in addition to having my sort of 3 key mentors, what I started doing was I tried to read a biography every 2 weeks from a billionaire because my goal is to be a billionaire by 30. I wanted to become a billionaire. So I would typically read biographies only from people that had become billionaires all the way back to Rockefeller, all the way up to, Palmer Luckey, who, became a billionaire at the time that I sort of read his book. And so I would sort of just try to kind of augment it with these sort of, I would treat them as mentors or stories or whatever, and just try to learn as much of that as possible. And I think that's been very helpful. I think I typically skew and have an affinity to people that made their billions younger versus older as well. But really my litmus test is, I learn a ton. But sometimes I think like, what would Elon do in this situation, or what would Steve Jobs do in this situation? And I can almost, like match it up to something that happened in the book. And it's like having kind of that perspective. So I'm a huge fan of reading on, student history.
Do you still do that to biography, a biography every 2 weeks?
I've gotten worse at it. And partially because I started running out of books. So what I started doing is I started rereading them, which I found was helpful because you miss a lot. Like on like, a volume of text, like, this, sometimes I've read a couple thousand of them in the way. But sometimes it's like a couple thousand pages, so it's like, it's very easy to miss some things. So I found that I've extracted kind of like multiple conversations with your mentors, you start extracting residual value from rereading them. So, but I started rereading it to an extent.
Do you listen to the Founders podcast?
No.
You should definitely add that to your podcast listening list.
I've been trying to get into listening to podcasts. I just started doing that because I think that's another great way to do it.
Clearly, you should obviously listen to the podcast you're on right now.
Well, I listened to some of your stuff before I went on because I thought it was cool,
Good.
But
no, but you should listen to Founders if you like listening to learning about founders. It's the whole thesis of it. It's a great podcast, so I'd recommend it. Are there key lessons and takeaways when you think through all the books you've read that you have like, okay, this is the high level shared similarity or consistent theme across all these founders that enable them to achieve the outside success?
Yeah. So I think that, just to close out the thought, the short answer kind of on like where we look for is I think I do read and I get advice, but there's a very strong litmus test you apply, a very strong criterion. And that's kind of like, I think that's key of like, having the criteria for the information that you're kind of using or basing stuff off of. So it's like, I'm reading biographies, but not just of business people, but exclusively people that became billionaires, or became successful. The 2 sort of common threads I found have been that number one, they tended to all go very big. And if you look, there was a lot of companies in their space that just didn't have the ambitions that they had. And just through time and virtue of kind of the amount of funding they were able to raise, they were able to consolidate empires just on the basis of they had a bigger vision and they weren't looking to run business that made 20 or $30 million a year. They told everyone they were going to have $1 trillion company, and oftentimes they wound up with 10 or 20 or $200 million companies, but that made them kind of very, very wealthy independently. And then the second is I found that they typically have one or two superpowers. So like Steve Jobs was his creative vision. Masayoshi Son was just his tolerance for risk. I mean, that man was the richest man in the world and then lost it all and then became the richest man in the world again, and lost it all again, just like, and you read it, he was unfazed, throughout the book. His superpower is kind of his willingness to just take crazier bets and risks than anyone else had. To Elon, who had this sort of like, real vision and bent on what he wanted to do, like being able to see the future. And he firmly believed that like, the most successful and richest people would be able to see the world 50 years from now and build that technology, not build technology for today. So,
Yep.
I think that's been the one key lesson is oftentimes these guys weren't good at everything, or at least the way their biographies are written positions them as not good at everything. It positions them as really good at one or two things, typically one thing, but they really milk that superpower. And really paired it with a bold vision to kind of get to.
I totally agree. And okay, so are there key things that you are putting in place? It sounds like one of them is sort of being actually, I want to, you can keep asking about that and what you've learned there, but I want to kind of go through, you made a really interesting post recently on LinkedIn, talking about some of your key things. And so going through this list, right? You talk about 5 business lessons you've learned in your basically from the University of trying shit out and figuring it out. So I'm going to read these and I kind of want you to respond to each one a little bit, right? So an ounce of doing is worth a pound of studying. You got to practice and get the reps to figure out anything out. So you're still pretty young. How many reps have you had and how do you keep getting better and better? And what does that look like while still building a business that is going to grow, right? I think you got to keep building. Like Elon, I'm sure still learning every day. Maybe. How do you keep doing that as an individual? And you have a lot of reps to still get.
It's a combination of just putting in more hours than others. I think that there's a tendency to, once you hit a certain point financially, your business at a certain scale, to take your foot off the gas and start taking weekends off, and start, like bringing back some of the stuff. And while I'm sure it's important, I think that, the fact that I've continued to work 100-hour weeks, regardless of if it was out of necessity and now, it's needed to, I actually find that I'm learning a lot more in those additional 40, 50 hours because I might be doing less grunt work and the stuff that I'm doing is actually teaching me more than when I was doing the Excel or the accounting, So I think maintaining a similar work schedule, even when it's no longer out of necessity, and maybe I'm sure I've pared back my hours a little bit, but I still probably do, work 30 more hours a week than I absolutely need to. And I think that's sort of critical to getting those reps in. And then I also think there's the curiosity of trying to learn other people's jobs. I am 1,000% confident that I will not be good at them, and that's not my superpower. But whether it's shadowing your employees that are doing something that you don't know how it works, or going to events like, political fundraisers that might be out of your comfort zone, I think having an intellectual curiosity to understanding how everything at your company works, because it makes you a better leader, because you just understand the way the business works more, but also you become a more sort of dangerous entrepreneur because now you know a little bit of everything and you know how to do these different things, which other founders might not know how to do it.
So how do you decide what things to focus and work on? So like I hear you on you can work harder than anyone else. I don't necessarily buy that's always the right way to go in the sense that like people, you got to be smart about where you spend that time. If you're spending 100 hours working, quote unquote, but you're doing all your bookkeeping and accounting when there are bookkeepers and accountants out there who can do it better, that might not be the best use of your time. Like maybe a little bit, learn the high level, sure. So how do you decide where to spend your time and then what to delegate?
As I said, I think that, a lot of bookkeeping is grunt work, but I also think you'd be shocked by the amount of founders that I've talked to of successful companies that couldn't tell me how their accounting worked. They're like, oh, like, I just get the P&L from the bookkeeping firm, and then like my CFO gives me budget suggestions. So I think there is an aspect of like understanding the financials of your own business and understanding how they work and what you're spending money on like really well. You do that if you're the one processing the expense reports for at least the first few weeks, you get a lot better of a feel for that than if it's abstract and summarized on an Excel spreadsheet for you. I think that the goal is that typically it's hard, and I don't think it's a perfect science, and I think I've wasted my time doing certain things, but I think that if you're working with the customer service team and answering customer service emails and calls, at a bare minimum, you're going to learn something about your company and you're going to win the respect of your team. So what I say,
And in those cases, and about the customers.
I will typically advocate for doing a job function. At least I would say the way that it works is 50 hours a week is just stuff I absolutely have to do by virtue of running the business. I
And by have to do those things you define as like no one else can do them. Is that what it means?
Correct. Yes. I'd say 15 hours a week is sort of the shadowing or intellectual curiosity where I'm actively working with people in sales. I'm like joining a sales call that I maybe don't need to join, but I'm curious on how they pitch it. Or I'm sitting in an accounting call, an accounting team's call to learn how we're doing quality of earnings, like in QOE, because I've never done quality of earnings before. And just getting some of those reps and osmosis in by doing things that aren't directly in your job title. But I think you win the respect of your employees by doing that. And I think that you get benefit, like you learn things and you become a more effective entrepreneur by doing that. And then I'd say I probably spend 10 to 15 hours a week on what I would just call intellectual curiosity, which is reading about something new in the business world, whether that's like, how does an LLM work? Or like the other week I was really curious. I realized I never understood how a power plant worked. So I spent like 6 or 7 hours on YouTube, like looking up how power plants worked. And then I actually visited one. I went and you could get a tour.
I mean, that sounds awesome, but also very different than your businesses today, anything you're building right now. Like, why is spending basically a full day's worth of time on a power plant? It sounds very cool and intellectually stimulating, but not relevant to your business.
But that's the point about getting reps in. Neither was government contracting, and sort of online workforce education, but you never know what that thing is that you see where there's going to be that 99 sort of like percent return, that 99% margin. So I think there's an aspect of, I enjoy it. I think you have to enjoy it to stay sane, because if all you're doing is like putting out fires as the CEO of a company, and, like I think it's draining, but I also think that like it makes you a more capable entrepreneur, because now who knows, maybe we're talking to an angel investor that made all their money, building power plants, and you're bound to make a much more greater impression on them than the other tech founders that can tell you how a power plant worked to save their life. So,
I mean, I'm shocked by how many people I speak to. I'm a longtime investor, and I'm shocked by how many people I meet with, and they've not even done the courtesy of looking at my LinkedIn before the meeting. It's shocking.
I think, yeah, totally. So I'm not saying it's 100% rational or makes sense, but you were saying, kind of like, what's the trick to getting reps in? And I'd say that it's in addition to doing the stuff you absolutely have to do as a CEO, try to dedicate some time to shadowing and learning how other parts of your company work if you don't know how the job works, even for a few hours a week, because you'll learn something and become more proficient. And try to leave some time for intellectual curiosity and just understanding how the business world works and learning about things. And like, I firmly believe that understanding the economics of power plants maybe won't enrich my business, but the fact that I understand how power plants work and the energy trade and Bitcoin and all these things, I do think it makes me a more effective entrepreneur in the aggregate.
Fair. And I by that, I do think I would actually agree with the thesis, at least, that the great entrepreneurs are ones who read a huge amount. I mean, I've done, 80 or 90 episodes now of this podcast. Great entrepreneurs are ones who read a lot and have a wide-ranging list of interests and can go in a lot of different directions with their mental models, because they pull in ideas from all over. So another thing you said is you learn from people who've done what you want to do. If you want to be a doctor, learn from doctors, et cetera, et cetera. How did you, are your co-founders the people you're learning from essentially for this business today? Or who are you constantly trying to find new people who can answer those questions?
My list is pretty dang short at this point of like people I would love to learn from, which is good because it's like enterprise sales. It's like FlashPass. We only have 49 potential other customers, there's probably a short list I have that is probably like 20 to 30 mentors that I really feel like I could learn from. And I think I make a concentrated effort to build relationships with those people. And probably the majority of them don't want to mentor me, but, I might get one or two sort of mentors out of it. So, you can get a little bit more advanced. It's like, are they speaking at a conference, making the time to fly out and kind of get there? Are they doing this? Are they passionate about a political cause? Let's set up a fundraiser to make sure you're seated at the same table. Like if you really reduce the list to like 15 people you really want to get in front of and you have a couple $1 million of capital to play with, it's actually not that difficult, I think, to get in the same room as those people. So I'd say that right now it's a lot more targeted. I think I have my 3 core mentors I've learned a lot from. But my goal is to become a billionaire by 30, in the next few years. And there's not that many people that have done that are currently alive that have been able to do that. So my list is pretty slim of people that I really want as mentors, but working really hard to get in the same rooms as them and then making there be enough upside for it to be attractive. So like I would gladly give up, $5-6 million of FlashPass stock to certain people on that list just to be able to pick their brain once a quarter. And that becomes interesting because it's like, hey, for 2 hours of your time a year, I'm going to give you $5-6 million of my company, So I think you have to be willing to pay for it. But I think that also their advice and perspective is going to be a net ROI positive. So I also think it's not just showing up with like, hey, teach me, but having a very sort of like knowing what you're willing to spend to get that, what you're willing to give up to get that, and showing them that you're serious about taking their advice.
I mean, the key takeaway that I at least keep coming to there is one, your willingness and ability to just say, I'm going to hustle, essentially. Like, I don't love the idea of hustle culture necessarily, but you're going to hustle for things you care about. And it's like, I'm going to fly to a conference where I know they're speaking just to make sure I can show up in person and be there. They might not even know I'm going, or I'm going to make sure I'm at a dinner and at the same table as them. Like, these small things are, to me, very, very impressive. A lot of people just they're unwilling to take the time or energy and effort to even show up. And I give you props for that. Like, seriously, credit.
And you have to show that it matters, right? Like, you have to make it worth their while. And I think that, there are a lot of people that I'll see that request mentorship or sort of have this naivety of just, because like they're going to want to do it out of the goodness of their heart. And like, obviously they're going to want to do it out of the goodness of their heart, but I think that it's a lot more effective. The est is a lot more effective if you show them how much it matters to you. And there's lots of different ways to do that. I think it's by being attentive. It's by taking notes. It's by kind of absorbing everything they say, but it's also by doing things like, share like a significant portion of your company for their mentorship, or like all sorts of other things you can do, I think, to really show them matters. For one of my mentors, we did free work for a bit, and it was like never work for free. And I probably spent $50,000 to $60,000 of my own money just to like pay the salary of the staff on that work, just like to do that work. But I promise you, we were the only vendor that showed up and did free work. And not only did we win it, it was like, oh, this guy's really serious. They really want to work with us, So I think that you have to be willing to do things that are maybe a little bit unusual, or kind of like put your money where your mouth is if you really want to attract someone of that caliber to help you and show them that you're willing to go the extra mile, not just to get that meeting, but also that how much that mentorship is valuable to you.
Why? I mean, last few questions I want to get to you, but this relates to them. Why a billionaire by 30? Like, why that number? Why that age? Why that cap number? Why that age number? And what do you expect or assume being a billionaire will mean for you?
Got 8 years to get there, so
but like, even myself, and I've done a lot of different companies at this point. I mean, I was 24, 25 before I finished graduate school, right? I didn't even get out into the working world until after graduate school. So you're ahead of me, certainly in time-wise, but like, why that number in ambition? I'm sure you have time to get there, but
I don't think it's so. Why that number? I don't think it's that much more work to build $1 billion, become a billionaire, than it is to make and sell your company for $100 million.
I love the ambition in that. I love that.
I think you're just playing with different numbers. I think you need to raise more capital and things like that. But in some sense, it's actually easier, because if you can go raise $1 billion in capital, it's actually a lot easier to become a billionaire, because you can basically hire the best people in the world, and like, really kind of make something. So I think, kind of Canada was an 8-figure company, an 8-figure acquisition, FlashPass is going to be a 9-figure sort of company here pretty soon. And I think the next logical step is to not go backwards or stay the same. The next thing we want to do is going to be a 10-figure company, or sort of a multi-billion-dollar exit. So that's how we got to that number. It's like just maintain that positive momentum and kind of like make sure that the next thing is equally big. It's bigger, kind of growing the same multiple. The underpinning ambition is probably a conversation for a later time, but I think fundamentally I worry about humanity. I think that we're very likely to wipe ourselves out fairly soon, whether it's nuclear war or another pandemic, and bio sort of engineered weapons. But we sort of all have the capacity right now as a species to completely destroy ourselves. And I don't think we're stable enough. And the percentage is non-zero that over the next 1,000 years, something doesn't happen. We don't just get wiped out as a species. And I have a few ideas on how you can sort of counteract that or fix that. But I think it's very hard to do that if you don't have a platform and credibility. And I think one of the easiest ways to do that is becoming one of the world's youngest billionaires will give you a megaphone and an audience and sort of a platform to maybe develop some of those tools or things I want to do. I think that will ultimately substantial to the future of the human race.
I mean, I love that vision in that in some ways, don't say this wrong, the hubris that you think you're someone who can go help make that change in value add for us. I will say humanity is faced many, since we started the Cold War, essentially, we've had existential threats of being able to destroy ourselves. But But okay. So on that note, one last two questions, basically, last two questions. Given your ambitions, where you want to go, and what you want to achieve, do you even understand the term work-life balance or work-life harmony in your life? Like, what does that even mean? And should it even matter for someone who wants to achieve $1 billion by 30?
Yeah, I would say there's honestly not a ton of it. Kind of take it one day at a time, and maybe there will be sort of like long-term work-life balance, but I'd say right now it's not a concern or a consideration.
Yeah, fair enough. If there's one piece of advice that you would give to anyone who wants to be a successful entrepreneur, right? The followers of this podcast, to be an excellent entrepreneur, what is that single piece of advice that you would give them?
I think it really comes down to that idea of it's just as easy to do something big as it is to do something small. So if you want to become an entrepreneur, set your sights on a big target and kind of back out from there. Because even if you fail, an objective failure in that goal could still, number one, be a life-changing outcome for you. But the type of things you're going to learn playing in those arenas, when you're playing with tens or hundreds of millions of dollars, are going to be infinitely more impactful and elevate your career more than trying to bootstrap or start something from the ground up or try to build something very niche.
No, I agree, and I love that advice. Go big, basically go big or go home.
Yeah.
Emil, how can people get in touch if they want to learn more about you, learn about your businesses, invest in you, have you be their mentor, you name it, if you have the time for it. But how do people find and learn more?
LinkedIn is great. I just started posting on LinkedIn about 2 months ago, a little less than 2 months ago. So I'm trying to grow that platform. I'm trying to be a little bit more active there. So yeah, follow me on LinkedIn for more, and then just shoot me a message if you want to connect or chat. And I'm usually pretty responsive in the DM. So
excellent. Emil, thank you so much. I really appreciate the time.
Thank you. I really appreciate it.